Um, so we wanted to brief you like in the middle of the week. So that's why I've started this live analysis. Since we have seen actually a bit of a panic, but a lot of headlines that are in contrast. So, and especially a lot of headlines coming from the geopolitical side of the market. So let me I share my screen. Actually, I'm gonna share my screen. Once again, this is your session. You can ask me anything you want. We can have a look at any asset that you want me to technically analyze and etc. So this is a technical analysis session. I will try to brief you out with what's going on in the market, but as usual, you can ask anything you want. We are here to help you. So the reason why I have started with stocks and I put on DAX over here is because the stock markets remain to the downside since the beginning of the day, since the European Open, to be more precise. We have seen actually um, stocks being under pressure, yields taking a little breacher, and bonds actually being in a sell-off since yesterday. So as I mentioned, the stocks dip. Actually, the continuation of this dip, it was coupled with some headlines that have hit the positive sentiment. Today, quick reminder is that we had Mr. Powell speaking, Mr. Bailey, the governor of Bank of England, speaking. We had the budget report from UK along with the inflation in UK, but we also had Mr. Biden. We've seen Mr. Biden speaking as well. So, what has dipped further the equities as we were moving into the US session was Mr. Biden, who told to reporters that he's on the way. He's on his way to Air Force One. There is a real threat, as he mentioned. This is what his precise words. That Putin will use chemical weapons. So we are seeing that the leaders, and more precisely the U.S. presidents, actually still insist on the chemical weapons scenario, which something that presumably would escalate the war, and not solely in Ukraine, but it could be something wider. So this report, this statement from the U.S. president is something that increased the fear, and that's why we have seen yields getting richer. So the 10-year one actually, the 2-year one, so the short-term one richer to 2.12%, while as we can see over here, let me just share as well, DAX dipped to 1400 to 254. If I put the daily chart, you can see that it's at the bottom of a week's territory. Let me also, though, let me share, however, the US majors. So here we have DAX, so we have Dow Jones dipped, and that is a dip of around 0.46%. Okay. And if I just, let me just have all the major indices in front of me. So I need the USA 500, I need NASDAQ as well. So let me sort by simple. And we need the USA 500, and I'll put also in then as a next one the USA 100 as well. So here we are. NASDAQ, the USA 100 was the least, the one that actually declined the most. Okay, 0.74% lower. S&P 500 0.5% down. So we have a pullback with, as I mentioned, DAX and FTSE also fallen significantly DAX over here, this is the hourly chart. You can see how sharp this decline is. And I'm going to put also FTSE as well. So the UK 100, which dipped down to the to yesterday's support. So still holding, finding some kind of a support over there, but it has fallen also into red, extending the declines that we have seen after the inflation data from UK this morning and after the budget report earlier by Mr. Sunak, the Chancellor, the UK's Chancellor Sunak. So let me put some everything in line. So as I mentioned, we had the UK. Okay, the UK was in the spotlight today. Why is that? We had this morning when the beginning of the European session. That's why I'm going to shift to cable as well, because cable it was something that it was the biggest mover so far today. Why is that? We have seen on the European Open, we have the UK inflation out at 30-year high. So what we have, rising inflation, still, so further confirmation of rising inflation. So it was US, which hit 40-year highs. Now is UK, which hit 30 years high as well. And what that means, guys, you need to think the background of this data. What not the background, actually, what they imply. Rising inflation in UK, okay, rising inflation UK is adding, which while at the same time we have a pretty increasing tight labor market as well, is something that is adding further to the stagflation fears, because at the same time we have a comeback of higher prices in oil. So this is something that adding pressure on the central banks. Okay, so the stagflation is actually is something that the bankers are really afraid of. It's an economic nightmare. Why? Because its characteristic is that we have high energy prices, so higher consumer prices, so the living, the goods and services are getting expensive and expensive, so high consumer prices, high unemployment, slow economic growth, so slower GDP. Okay, this is what represents the slow economic growth. Rising inflation, I mentioned that. I want to miss something. That's it. So you understand that there is a lot of risk, because even if the central banks increase rates in order to control inflation, okay, then that will mean that they cannot really support the households and the companies, because they could control inflation, but they cannot really, if they rate hikes, even if they control inflation, they need to figure out something to also support the household and the companies due to the high energy commodity prices. So in the rising consumer, the goods and services prices, etc. So after the so central banks are facing a really difficult task in this situation, because the Ukrainian war, which is what actually um, added to the scenario of stagflation, okay, due to the embargo or to the oil embargo and etc. It doesn't really show any sign of ending anytime soon, right? And actually, there is further escalation, especially after Mr. Biden reported that Putin could use the chemical card, the chemical weapon card. So yeah, a lot, very difficult task for central banks, and in this case, because today was about UK mainly, the data, the 30 years high inflation, along with that massive 8.3% on the RPI, which is present tighter labor market, are backing the Bank of England decision to rate hikes again, to increase to increase the rates again. But the risk of further rise on energy prices, which will hit significantly the income and consumption of people, is actually adding pressure to the growth outlook of UK, and that is there is nothing really yet that Bank of England could do in order to avoid that. So yeah, that's why the fear increased, the sentiment turning the sentiment turning negative, and etc. So yeah, further stagflationary shocks, further stagflationary forces, and a very important adverse supply side shock as the Greek central bank head Tournaire said earlier. So, and that's not solely for Bank of England, something that the whole world is facing. Europe, first of all, the one that they will suffer the most, US as well, Japan, China, etc. It's not solely for Bank of England, but yeah, I emphasize on the Bank of England because of the UK inflation in the budget report earlier from Mr. Sunak. So, in regards to the budget, guys, we had seen actually we have seen actually earlier that in the budget we could see that the UK government cut growth forecast sharply. So the spring budget was based on projections of 3.8% growth rather than 6% that it was the previous expectation. Okay, so income tax rate will be cut to 19% by 2024. Also, Mr. Sunak um, uh, stated that he's hoping to reduce borrowing to 3.9%, but this is just what he hopes. So yeah, so on the budget report, which actually showed a lower revised growth forecast, we have seen that um, sterling has been has been pressured further, and the same thing we can see it from FTSE as well. So FTSE extend losses, even though it wasn't as sharp as cable. So we have seen that FTSE found some kind of a floor over here, but yeah, it's down to yesterday's bottom. While the UK gilt has rallied on this news. Now I'm gonna focus a bit on the pound over here. So pound, as seen this morning, down, drifted at 130, 173 to be precise. So extending losses. We have seen some. It looks to be like a small rebound. The last 10 minutes, actually, on the US session. However, the momentum remains to the downside um, um, as the UK government has cut growth forecast sharply, and this is something that added an overall pressure on the sterling. So sterling found so far an immediate support at 130, 173, but as you can see, MACD already turned negative. RSI and stochastic got overbought. They present some kind of a rebound intraday. But that looks a bit limited. So let's shift to the 30 minutes chart to see where we are standing. So yeah, negative MACD. RSI is trying to recover across 20, but is this just the correction before another attempt to the downside? Who knows? We need to wait and see whether, first of all, come on, whether stochastic or RSI will actually manage to cross 50 level, and whether this 30 minutes candle could extend further to the upside. So for the time being, this looks to be just a consolidation, correction, because the asset was oversold today. So this looks to be just a small consolidation before another attempt to the downside. While please have in mind that if it breaks that immediate floor that we have seen the last hour at 131.73, then the next support level, and I will shift my Fibonacci vice versa, so we could get the, oops, we could get the Fibonacci extensions as well. So here it is. Zoom out a bit, go into the 1 hour chart. So the next, oops, I need to, let me change a bit my Fibonacci, guys. So I need to add some parameters as well. I will add them. So we need 1, 2, 3, 6 as well. 1, 2, 3.6. I'm gonna add as well the 1, 8, 8. So this way, by adding more Fibonacci levels, you can identify the next immediate support levels in a really, really sharp, and a really sharp, sorry, the really sharp decline. So 131.47, 131.30. The next immediate support levels, if it breaches further to the downside. I'm going to put the daily chart on to see whether it crossed the 20-day moving average, and indeed it has turned back nearly, let me measure this actually. This was yesterday's gains, which managed to boost cable above the 20-day moving average, but now it has reverted the most of these gains. So let's measure a bit to see whether it has turned below the 50%, and indeed is below the 50% of the gains that we have seen since yesterday. So it's quite important to monitor tonight at the closure how cable will close. Will it close below the 20-day moving average and the 50% Fibonacci level? Will it manage to sustain a close above 20-day moving average? So that's quite crucial, because it will give us a clue whether this rebound that we have seen the last 2 weeks will extend, or whether it has faded already and we're gonna continue this decline that we have seen pretty much since the beginning of the year. Okay, so anyone asking about cable? No, none apparently, but okay, yeah, I'm gonna have Cable Yen, yes, Guppy. Otherwise, it's called Guppy. Has this nickname, and is it was a key mover. It was a significant mover, I should say. So let's check Guppy together. I have sorted them out in it. Okay, here we are. So something significant about Guppy. So I'm gonna start with the daily chart on, guys, just because I want to show you this bounce that we have seen this morning to 161. So I will zoom out this a bit. This is the record high. I think it's 6 years highs, if I'm not mistaken. Let me check. Let's wait a bit. It's a bit slow. Yes, indeed. This is today, this morning actually, before Guppy Pound Yen pulled back down, it managed to break and to breach 6 years high. So look at that. This is a monthly chart. So we are back to May 2016. Okay. And the asset has been seen to the upside since the pandemic, since 2020. So I'm going to get back to the daily chart on. So we have a nice, decisive boost the whole week. And you can see this candle. So rebound, a small correction, up, consolidation a bit, up, boost, outside Bollinger's, a bit of a correction. This is what it seems because the daily outlook, and I would like actually to check also um, the 50 and 200 day moving average. Okay, exponential ones. Let's check whether they give us any further clue. Okay, so the asset is above all the moving average, broken years support, breach 6 years, broken years resistant, breach 6 years resistant, oversold, yes, overbought yesterday, a bit of a pullback today, but it hasn't returned back the 50% of yesterday's candle, to be precise. So we don't really need to worry yet that this decline that we have seen today, it's actually significant. So overall, the medium term picture, as long as the asset doesn't get back to 158, okay, the overall, the medium term outlook remains positive. So, an initial, a very primary sign that we might see a reversal of this month's rally. Very first sign will be if today's candle or the week's candle get back down below 158 level. Okay, so I will put it actually. So yeah, this is what we should monitor. We should monitor the 50%, which is at the 158.80, and the around the 158, which was actually January's and February's resistance, now turn into a very significant support. As long as we don't see the asset breaching and moving below these levels, then the outlook of Guppy pound yen remains intact to the upside. And we see that also the momentum indicators are also supporting this scenario. Now, so these are support levels, okay? Resistance levels is obviously the high of the day. The 6-year high is at 161.15, was it? 161.08. Now, intraday, what's going on intraday? I'm going to get rid of this, of the Fibonacci at least. So we had, after the breach of the 6-year highs, we had a decline. So I'm going to use my intraday template, my 5 and 9 exponential moving average to see what's going on. So turn down, extending, bearish cross this morning was a sign of a pullback. Keep moving lower. Still, the moving averages are pointing lower. MACD, we have seen with MACD was a significant decline, even though it hasn't turned negative yet. However, stochastic and RSI are quite weak. So, what's going on? Actually, have you seen that the last 3 hours? Let me zoom in a bit. Have you seen that the last 3 hours it has found support at 159 level, round number as well. So as long as our hourly candle doesn't close below that level, it means that it's consolidating. But if we actually see a closure of our hourly candle below 159, that could imply that decline drift will continue further with Let's use HTR as well. Where's my ATR? Here it is. What ATR presents a 38 pips decline. So yeah, that will means that if it breaks 159, then it could decline further to 158.52. Come on, come on, come on. Okay, somewhere here. Okay, so ATR can help you to identify. Let me just measure it. Have I measured it correctly? Yes, somewhere here, 132, twice the, and 158. So this could be our next support levels if the asset managed to break the 59 level, 159 level. Um, this is what I'm trying to do, my dear Fry, trying to help you. So let me know what you're struggling with, and I will do my best. So a lot of you actually asking about gold, so I'm gonna skip all the rest and try to do gold first. Okay, okay, gold. Okay, guys, you need to be careful with gold. Why? What's going on over here? What has driven so far gold? Okay, it was the war, okay, because literally war implies to um it's a safe haven. Gold's a safe haven. So on the when the war started, we've seen a boost. We have a significantly boost to 270. So what's going on right now? We've seen the gold easing a bit, and the reason why this is happening is because the attention now is turning to the central banks. Don't forget that gold is an inflation related asset. So the higher then the interest rates are, okay, the lower the gold will be. Okay, dollar is priced, gold is priced in dollars. It's a non-yielding asset. It's inflation related. So have in mind that if banks increase interest rates, that's negative for gold, and that's why we've seen this decline on the increase of rates by Fed and by Bank of England as well. So, and that's why there is also a lot of sideways movement for 1, 2, 3, 4, 5, 6, 7 days in a row from gold. Because from the one hand, we have the war, we have the escalation of the war, which is something that supports the gold. But on the other side, we have a really, really hawkish central bank, which is something that adding pressure on the bond. So we have two forces, okay, opposite forces squeezing gold, and that's why we have seen it moving sideways, because it's been supported by the war, but it's being pressured by the central banks, so that's why it's moving sideways. So how you could what you should take care, what you should do with gold. The fact that it hasn't really moved back down below 1900s, which is very, very, very important level, very important um, support level. Okay, let me just take this out, take this out, take this out, take this out. So look at that. 19 is a psychological level, key round number, key psychological level for gold. So you should have it um on your chart. To the upside though, okay, 1950 is the upside resistance for gold. So these two barriers These two levels are the upper and lower trend line, the upper and lower trend lines of gold. So that means that these are your resistance and support area, because a breach and break above 1949 implies to a move above the 20-day moving average, but also implies an exit for this from this consolidation. So it's a positive signal. However, a pullback and a breakout eventually of 1900s territory implies to further decline for gold. Okay, so it is sideways for the time being, with these two being your significant support and resistance levels. Now, intraday, because I'm sure that you keep asking for gold because you are intraday traders. So, gold, gold. Can you summarize gold? Gold, please. Gold, please. Marmon, this is not the life to sell COVID tests. We're currently discussing about gold, but feel free to ask anything you want in regards to the markets or any asset that you want me to analyze, dear Smith. So I'll be here to help you. So, yeah, sideways moving consolidation for gold in the daily, so medium term outlook. Now, intraday, we have seen a rebound since yesterday, breached the I'm gonna put the 30 minutes chart, okay, over here. So breached the 19, that should be 1936, but we have seen the moving average flattening, so pointing to the right hand side. So that means consolidation. So we have a really mixed signals over here. So the fast moving average are pointing into a ranging market consolidation. MACD remains strongly positive. Stochastic is the same, it keeps pointing to the upside, but RSI dips. So what's going on? What's going on is a bit of a unclear picture, a lot of indecision, a lot of contradictory signs. What you should do is wait a bit until you have um, further signs, maybe an extension of the fast moving average further to the upside, or a bearish cross of the fast moving average implying to some decline, and so on and so forth. So for the time being, intraday at least, it looks like a bit weird. Okay, depending of course on your time frame, because you can see that if I shift down to the 5 minute chart, I have a bearish cross of my fast moving average. Stochastic and RSI are below 50, MACD declining, so there is an increasing there is an increasing decline, even though it has limited, it has already stopped. So yeah, depending on your time frame, but check your technical tools, guys. Okay. um yeah, so support, immediate support intraday for gold is the low that we have seen earlier at 1928. Okay, 1928, and to be more precise, because we have 1, 2, 3 for 3 times tested 1927. That's our immediate support level, while to the upside we have 1935 as our resistance level. On the breakout of 1935, then next resistance could be seen at 38, or even yesterday's highs, Monday's high, sorry, at 1939. Truly 1940 to be precise. And a pullback and a breakout of 1927, it could retest this level is the 20 period moving average. There's also this double fractal over here, so 1923. Okay, so I think I covered gold for good. Aussie dollar, dollar yen, of course. Um, so this is Aussie yen. So Aussie dollar. Here we are. Okay, let's start with Aussie dollar. Here we are. Actually, in the morning, it was actually yesterday, and up to until Asia session this morning, it was one of the biggest gainers. So have you seen this rally? This rally was on the rising energy prices. So the higher the energy prices goes, the more the Aussie will benefit because it's a commodity related asset. Okay, so uh, yeah, what was I about to say? So, however, it has stacked. You see these double fractals stack so far today in a range. Use this the upper line of the range and the down line of the range as your support and resistance level. But have in mind that overall Aussie is holding a positive outlook. So we need to wait and see when it will break that one or once that 0.7480 level. And as soon as it breaks it, considering that MACD is positive, RSI sustains a move above 50 since Monday. So this will extend gains to the upside with the next oops with the next resistance at 0.75 round number. So next immediate resistance, but also the our next resistance could be seen back to October 2021 highs. Okay, but we need to see the asset breaching and breaking the week's highs at 0.7480. Okay, to the downside, which looks a bit unlikely to move lower unless something very, very important is stated in the political perspective. So who knows? You need to have this in mind. So the immediate support is at this double fractal in the Bollinger Band line at 0.7450. So this is the immediate support level, which a break below that, a confirmed close below that, could open the doors to 0.7420 low and etc. But overall, so that's my daily chart. Overall, Aussie is one of the biggest beneficiaries of this war. 2 months, nearly 2 months to the upside, a very aggressive, decisive pull boost since last week. So we had actually, for those that were monitoring, you were monitoring the Aussie. That was a nice morning star formation, bullish sign that actually signaled this rally. Okay, so overall a positive medium-term outlook. MACD positive RSI, stochastic positive RSI to the upside since for the last 2 weeks, and so on and so forth. So let's see the weekly chart. So 1, 2, 3, 4, 5 consecutive weeks positive, one down, another two positive so far. So immediate. So overall outlook positive with eyes on October 2021 highs. Now, Aussie Yen. Aussie Yen. This is Aussie Yen. This is the 1 hour chart. So after breaching 90-70 territory, it has seen some kind of a decline. So let's see, a decline. Let's a bit bizarre. Let's see. So decline. So lower highs, right? Over here, all we have is okay. Sorry, just a second. One higher low and one lower low. So this might be some kind of diversion signal, diversification signal. But let's wait and see. Let's wait and see. So yeah, another asset that you should be a bit patient to see a breakout before taking your decision. um, so even though the overall outlook is pretty clear, Aussie Yen has been in a rally since January. MACD extremely positive, keep extending higher. RSI at 84 keeps rising. So even though the overall outlook remains positive, okay, and this it has some really strong candles over here with attention turning to 2015 highs. Okay. However, intraday, if you're a scalper, you need to be a bit patient and identify either a breakout, monitoring for a breakout above this trend line that I use for connecting the highs and connecting the lows, or a pullback below this trend line. So for the time being, is actually swinging to the downside within these two lines. So up, down, up, down, up, down. So yeah, consolidating. You should add this regression channel, and this could help you identify a breakout of any of these levels and could give you further signs of direction. But yeah, so this this is in regards to the Aussie yen. Euro dollar, of course. Euro dollar. Euro dollar. It's a euro dollar. What's my euro dollar? Okay, here it is. So perfect. So dip. This is a 30 minutes chart, guys. Okay, this is 30 minutes chart. We have a bit depreciation, a lot of pressure, and this is a bit. It was expected. Okay, euro dollar represent two economies. Represent euro and represent dollar. Europe and US and US. Europe is the continent that is exposed the most to the war. And on top of all this, um, it's in a recession. It's in a clear recession. Okay. Also, have in mind that dollar is a safe haven. So the headlines that I mentioned earlier, this is dollar. The headline that I mentioned earlier in regards to chemical weapons and etc. They spread the fear. That's why we have seen boost on the dollar because people turn back to the dollar again, to the safety of dollar. Okay, so that's why all the dollar crosses, or the most of the dollar crosses, are looking to move on the strength of dollar. Now, euro dollar right now, it's been to the downside since this morning, early this morning, doesn't show any sign of reversal. The price remains below the 2010, 29 and 5 moving average. Some small correction, but just correction, because you can see how aggressively negative MACD is. So these corrections are just corrections. nothing else. So if I put my regression channel as well, you can see that it remains in these barriers and is expected to remain to the downside. Momentum is negative, is negative, and it's expected to continue being negative. So dollar is expected to continue gaining against the euro. So today it has breached again yesterday's lows, okay, low territory. Okay, so just to remind you that on the breakout of this 1096 level, then it's pretty much is like it could be some kind of a free fall to retest again the lows that we have seen last week or the beginning of March. So down to 109 and 108 territory. Okay, because from fundamental perspective, there is nothing really to support euro. Okay, the situation with the world is boosting the risk aversion. Okay, so that's why we've seen the dollar gaining. So daily picture is the daily picture remains for let me be precise, for 23 days in a row below the 20-day moving average, failed to break, to move above the 20-day moving average, back down again for 1, 2, 3, 4 consecutive days. So on the breakout of yesterday's low, which is at 10960, we could see the asset the next few days breaching months and years low territory, which implies to 109 level and a 108 level. Okay. Now intraday. Let's see intraday. And also something that I should add something, okay? Europe and US. US is showing is a safe haven. The currency is a safe haven. The Fed is increasing rates, something that support the dollar. The economy is showing slow growth. Okay. On the flip side, we have Europe, still a dovish stance, so they're not expecting to increase rates anytime soon, but at the end of the year. Okay, so very dovish policy, big exposure on the Ukrainian war. Okay, the yields differential between the two currencies is getting wider. So from fundamental perspective, the euro is expected to remain under pressure against dollar. That's why we have seen euro declining since actually for more than a year now, since last January 2021. Okay, there is nothing from fundamental perspective to signal any long-term rebound of euro yet. Now, intraday. Let's go to the 30 minutes chart. Is the 30 minutes chart down, down, a bit of a correction, a pullback again since it failed to move above the moving averages, the 9 and 5. MACD is negative. RSI started to rebound, failed. You can see that it looks to be just corrections, but remains to the downside, remain weak below the 50 level. So decline continues. Okay, this is a negative picture. Ooh, 1 minute chart. I will do my best, but this is too fast for me. Okay, 1 minute chart. Okay. Um, what can I see? I can see that it just broken my double fractal over here in this 1 minute chart. So that's negative. That's negative. What can I say? So you're in a 1 minute chart, Dali. So breakdown, immediate support, immediate resistance could be seen on these highs at 14,569. So it's a very fast environment. Next support is on this double fractal at 14,524. and so on and so forth. So this is very, very fast for me, but you have moving average pointing lower, you have Bollinger expanding, you have seen the breakout, you have MACD declining, you have RSI declining, you have stochastic declining. So I'm not sure what you want me to cover over here. Okay, it's 1 minute chart. It cannot be analyzed on fundamentals. It cannot be only be analyzed on technicals. So check your signals, check your technicals, and take a decision. I cannot really analyze a 1 minute chart. Okay, it has been for 1, 2, 3, 4, 5, 6 minutes to the downside. Next support on this double fractal over here, 1, 4, 5, 2, 4. Okay, so really, really fun. So, um, we have seen this gold to you. Of course, someone asking about gold, about oil. Sorry, about oil. Oil, one of the biggest gainers once again, resuming his upward movement. So you see, we had last week, we've seen a bit of a pullback because of some like temporarily positive news in regards to progress on the Ukraine, talks, negotiations, but didn't last it. So gold holds well above 100 territory. More precisely, it retest once again the highs of the week at 1 to 12. We have a nice, we have seen it sustaining a move above 20-day moving average for 5 days in a row, recover 60%. Yeah, so it recovers more than 60% of the losses that we have seen last week. So that implies that if today managed to break the 61.8%, we could see it turning back to 124 territory, because MACD is positive, so the overall outlook is positive. Stochastic the same, RSI is the same. So, and fundamentals are supporting the boost of oil. Okay, so the risk of backdrop, largely due to the war uncertainty, they continue to boost oil, of course. And I saw something earlier. Let me find out. Okay, also something I forgot is that last night on the afternoon we had a decline of US inventories, something that also supported oil. And today we have also inventories today. Are they out? Yes, they are. Okay, so crude oil inventories dropped to 2.5 million versus the estimate of 0.11 million built. So the weekly crude oil, just check the numbers. Okay, we have a drawdown again, similar to yesterday. So still another decline on the inventories. Remember, a decline on the inventories is something that boosting oil higher, and that's why we've seen this extension just on this session, just on this further rally on oil, because of yesterday's US crude stocks that were lower, also today's weekly inventories that also came lower, also due to the Ukrainian war as well, with EU discussing further sanctions, something that supports oil, because further sanctions it mean supply disruption. Mean, guys, that in a few days we might not have the necessary things. Okay, so yeah, so there are continued calls for further bans of Russian oil, embargoes on Russia in general, We have also Biden calling for uh, nuclear weapons. So all these support commodities, spread the fear, support the safe havens such as dollar and etc. So there is no progress of peace, and as long as we don't have any progress of peace, we're gonna keep seeing oil to the upside. So oil breach trying, actually hasn't breached it yet, hasn't reached yesterday's Monday's highs, so it's just a breath away of Monday's highs, but very very well positive because MACD keeps rising, stochastic positive, RSI still rising. Can you see this slope? Fast moving average pointing to the upside. So the fact that the fast moving average are keep pointing up, it means that there are more bulls in the market. So the next resistance of oil is on our Bollingers. Okay, so it's pretty much. I'm gonna use. Let me just use. So you see, if that breaks, the next resistance is at 109, 119 territory. Now, if you are an intraday trader, let me get back to my hourly chart. Try to see. Okay, my expansions have already hit it, and it looks that the 261 Fibonacci extension is at 11364. So this is the next intraday near term resistance level for oil. So we have covered oil DR charts. Have a lot of spam over here. Ooh, a lot of spam. Someone is spamming me. DAX, okay, DAX. It was to the downside. It was the one that they yeah, so here is DAX. I'm gonna put the 30 minutes chart down, 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 down sharply. A bit of a correction earlier, but a pullback again. Not really sure what to tell you, Quebec, but MACD down. RSI, a bit of a correction, but not really crossing the 50 level. The same stands for, if I zoom in, you can see that the same stands for RSI. Tried to recover, but again, it's turning back down again. So that looked to be some kind of a profit taking, and now further decline because you see the fast moving average I keep pointing down, Bollinger's expanding to the downside, so there is still a lot of steam to the downside. So pretty much the DAX, it remains negative with the very immediate support level is this low that we have seen earlier. uh, if I zoom in, you can see that it's also a low that we have seen yesterday. So this remains like a very significant floor, which if it breaks, it could drift DAX down to last week's low territory. Okay, but yeah, so negative outlook intraday, but a neutral outlook in a daily basis, because in the daily outlook we can see that the DAX has stuck into a ranging market for 1, 2, 3, 4, 5, 6 days. So a bit neutral in the daily chart, but intraday it's in a continuous drift. Um, Bum, 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 bum. Let me see further questions because I have more. Uh, Wait, I've lost a bit. Where are we? So we have seen DAX. We have already seen Nasdaq, but I'm gonna do it quickly again. Nasdaq, it was to the downside. We have a boost on the US session, turning higher. Let me delete these lines. So I found some bits. So let me check what's going on, whether there is something that I have missed. Oh, your stocks have found some kind of a boost. Okay, maybe to the central bankers because we have Mr. Mester stating that front loading hikes better positions policy going forward. So, Miss Mester is speaking right now, and she's saying that she would like to front load some of their interest rate hikes. Better to do that earlier rather than later. Uh, okay. So calling again for aggressive policy. That's why Nasdaq might found some kind of a floor over here. So obviously our immediate resistance level lies on the days on the high of the day, which is up to here. Okay, a decisive pullback. So we might see some kind of an improvement on the stocks now. And so, okay, Alan replied to Joy Smith. Yes, Smith, it was pound yen that it was explained before. Gold, they have already decided that, my dear Sishifwe. That's why we have all these magnets in the market. They are sanctioning. They have put sanctions on the Russian oil together, but the U.S. will not be significantly affected because U.S. it is one of the biggest oil consumer, but it's buying the majority of its oil mainly from Canada, so it won't be really affected. But EU last year, for example, bought from Russia the 60% of its needs. So it's very, very dependent from Russia. So what that means, it means that the sanctions that they have put to Russia, it will have a negative impact in the European economy, okay? Because they need to figure out fast other sources uh, of oil, which is not something easy, okay? Something that cannot be done. They cannot really do that like fast. So what that means, how it will impact the market, it will lead to further increase on the energy prices, okay, and will pretty much brings Europe into further recession. Europe was already in a recession due to the pandemic. Now things are getting even worse. Okay, so that will mean if you okay, if I don't really speak about Europe, but I will just generally speak about the market. That means that the safe haven asset will benefit. Commodities will remain on bid along with energies. So by referring commodities, I'm referring to everything: platinum, palladium, nickel, aluminium, gold, um, oil, gas, cotton, cocoa, coffee, everything. Okay. So because wheat, wheat as well, because Russia and Ukraine, other than the fact that Russia was one of the biggest producer of oil, they were exporting also other stuff, such as sunflower oil, wheat, a lot of stuff. Ukraine, I was actually is actually supplying to the market the 60% of the global economy of the global demand of neon. Neon is a metal that is used for producing chips. I mean, chips for computers. So it's not just the sanctions that they put on Russian oil; it's the overall situation. Okay, is the overall situation. So we are facing a recession in Europe, stagflation in the whole world, something that implies to a depreciation of stock of equities, boost of metals, commodities, soft commodities, etc. Um, yeah, so that's it. Smith, I have already replied to that. Was pound yen. Okay, you asked the same thing many times. It was pound yen. Okay, it's a very interesting asset today. Um, yeah, it is a very interesting asset today. So a big drift after breaching 161. So what will remain to see is whether it will continue turning lower and breaking this temporary floor that we have seen at 159, or whether it will eventually reversal. So let's wait and see whether it will turn back to the upside and breach the 38.2 Fibonacci level at 15980. Okay. Yes, Alan, thank you for the help. Thank you for replying to Smith. Yes, 159 key support level for pound yen, because you found the floor on that for 3 consecutive hours. Now we have some kind of a rebound. I'll put the 30 minutes chart. So are we gonna see a reversal? Who knows? We need to see, for confirming a reversal, we need to see our 30 minutes candle confirming a breach and breakout of the 38.2 Fibonacci level, and even better, the 20 period one. Okay, so yeah. Thank you very much for your comments, dear Jack. Oh, Yen. Let's okay. If we are running out of questions, I will call it a day. I will check the last few questions. So we'll have Yen. Um, Yen. Mm, where's my Yen? Oh yeah. Okay. So daily. I'm starting with the daily because what? Yen is a safe is sorry. Cat appreciated by oil, along with the fact that the Bank of Canada increased rates, is in a hawkish stance, something that supports the Canadian dollar. And on the flip side, we have yen with a Bank of Japan that is a very dovish. That's why we have seen this impressive rally, which doesn't look to run out of steam. You see how aggressive MACD is. RSI keep running, keep pointing higher. We have seen continuous positive candles since the beginning of March. So this rally remains intact. Okay, remains strong. And so the overall outlook for CAD yen remains positive, with the next long term or medium term resistance to be seen back to 7 years um, territory. Okay, so now I'm gonna just skip and go straight to the 1 hour chart. The pullback, the decline has over. We have a rebound the last 3 hours with the asset breaking my latest up fractal. Okay, my stochastic. Have you seen this, guys? My fast moving average have bullishly crossed. So that's a bullish sign. Another bullish sign is the sharp slope of stochastic to the upside. Also, another bullish sign is the fact that RSI is above 50, is at 60. So that is further boost some increasing positive momentum for cat yen. So the next resistance level for the asset is back to days highs on 96.48. Okay, so yeah, that's it. If it managed to break this high, you can use the Fibonacci expansions to identify further resistance levels. So we have, if that breaks, we have 96.70, another resistance level, and 96.80, the next resistance level, based on the Fibonacci extensions. Mhm. A lot of spamming today. Thank you very much, dear Mania. Hopefully, I help you. If anything is needed, just let me know. And I'm in the very, very last question. Percy is asking for euro dollar. I have covered it before, but I will do it again. And let's finish with euro dollar. Guys, trade what you see, okay? Trade what you see. I am trying to cover both the daily charts and the intraday charts so I could help you, because some of you are day traders, some of you are price action traders, some of you are intraday traders, some of you are scalpers, and etc. I'm trying to cover everything, but I obviously I cannot do this uh, fully. But yes, always trade what you see, not what you think, what you see, what your what your candles are telling you, what your momentum indicators are telling you. Okay, trade what you see, not what you think. Now, euro dollar. So okay, it's been to the downside aggressively today. We have seen some kind of a rebound today. Not really convinced, to be honest. MACD remains negative. The asset is well below the 20 period moving average. So yeah. But of course there is a rebound. So on this rebound, uh, we could see extending gains, but our next immediate resistance level lies on our Fibonacci level. So 38.2, so it's just a breath away. So 109.90 is the next immediate support resistance level, but the key resistance level for the day is the confluence of 50% of the mid level of this decline, and then 20 period moving average. This is a 30 minutes chart, by the way. So 110 remains your key resistance level. If the asset fails to break that level, then this could be just a correction before another attempt to the downside. Okay, because overall it remains negative. So you see, MACD stochastic is my short-term short-term technical tool. So clearly presenting this rebound. Stochastic RSI the same, sorry, but yeah, in order for this downtrend to be reversed and the asset to get back to 110.50 highs over here, we need to see a breach and break of 110. Okay, this is the daily chart as well, still negative. The asset remains at the low territory of the week. This is a 4-hour chart. You can see that it remains in the low territory of the whole month, and more precisely, if I zoom out a bit, you can see that it remains it remains in a downwards channel. Okay, but this is uh, uh, something, the decline is something, it's in a downtrend for the whole March. Okay, and it doesn't really the outlook doesn't really look to change for the time being. But I know that you're not really interested in the long term view or the of the long term view. So if you are interested in the just in the very short time frame one, of course we've seen a rebound the last few minutes, the last hour to be more precise. But that again depends on which time frame you are. So now, right now, I've put the 50 minutes chart to show you that uh, we have this rebound breaking my up fractal, and the fast moving average are ready to provide some kind of a bullish cross, but they haven't yet. So I don't have a confirmation of a rally. So I need to wait for this candle to close to see whether the next one will extend further up in order to confirm a bullish cross in the 15 minutes chart. So be careful. Okay, this is a 15 minutes chart. But yeah, but overall it's under pressure. Really looks to be just a correction. Okay, pound dollar. Okay. So uh, my view, I cannot obviously state my view clearly, but what I can tell you is that from technical perspective and fundamental perspective, even though pound and Bank of England is expected to continue increasing the rates, the increase of rates, it won't be as fast and as big as the Fed, because the Fed is expected to move on with nearly 200 points rate hike until 2023. It's expected to increase 6 times its interest rates just this year. So this means that dollar will be the strongest currency of all. Now, let's stick to the technicals. Pound over here. We had some rebound, of course, the last 2 weeks, but the outlook remains negative, okay? If I zoom out, and this is a weekly chart, we can see that it remains in a downwards trend below 20-day moving average, week moving average, 9 moving average, and 5 moving average, and below this middle line of my channel. So overall, cable remains in a downwards trend. Intraday is down. It has some corrections. That looks just a rebound before another attempt to the downside. If we consider that the momentum indicators are still negative and we don't have any further sign of any other bullish sign. Okay. Pound yen once again. What's going on with pound yen, guys? You liked it. Pound yen. Let's get back to the pound yen again. So if pound yen price reach on supply zone at 1 hour, will it turn to downtrend? Okay, so what I was trying to say about pound yen is that if it breach 160, which is our 50%, if it reach it but actually extends above it, okay, then it could be seen turning back to 161. But if it retests it but fails to move above it, and instead we have a pullback, then it could turn back to 159 again. Now, if it comes back down to 159 and even break 159 and extends further to the downside, then we might see further detection, and we might see our next support level if the asset returns back down to 159 and actually breaks 159 downwards, then our next support level will be 158.38. Okay, guys, I'm running out of steam. I will call it a date. Let me check a bit the calendar to see whether there is anything else. There is nothing else. We need to keep monitoring the politics. We need to keep monitor the developments on the Ukrainian war. We need to keep monitor the leaders. I think Mr. Biden called for a summit tomorrow. Let me confirm that. Yeah, I think he called for a meeting between the EU leaders and him. So we might see further reports, further headlines from that event. Um, so whether they will ease the fear or whether they will escalate the fear, that would be interesting. Um, uh, I'm sure that I have seen somewhere meeting, but um, yeah, cannot really see. Yeah, tomorrow. Yeah, I found it. So, guys, tomorrow we have a meeting between the U.S. President Biden and EU leaders tomorrow. So, yeah, that will definitely be an event that will drive the market, because if the leaders come out with further sanctions, then that will mean further fear. So further increase of energy prices, further increase of commodity prices, further boost of dollar, and so on and so forth. Okay, so I'm going to call it a day because I'm running out of steam. Hopefully, I managed to clarify a bit the situation for you and to clear a bit this mess. But even if you don't understand what's going on from fundamental perspective or political perspective, try to stick with what you see. Try to stick with your plan. Try to stick with what your indicators are telling you. Okay, not what you think, what they are telling you. Any breakouts of fractals or any breakout of psychological levels, any breakout of Fibonacci levels, maybe depends on your system. Okay, so thank you very much for attending. Hope you're having a great day ahead, and I'll see you again tomorrow. Stuart is having a live tomorrow, another live analysis on Facebook and YouTube. So we're gonna we will be more than happy to help you once again. Thank you very much. Thank you. Bye bye.